does it work? What are the shortcuts to be able to get the most credit and be able to get it quickly? That's exactly what we're decoding during today's training. After today's training, you're going to walk away with the exact steps that truck drivers or those looking to start trucking operations can actually follow to be able to build business credit. You're going to know about some of the newest changes. Like news breaking right now that's happening in the industry, and you're going to have the shortcuts, the path with the fastest success to being able to build business credit, especially in the trucking industry. We got a lot to cover, so let's dive in. Look, right now, lots happening. If you're in the trucking industry, if you're thinking about getting in it, you already know these things, right? Inflation, rising cost of gasoline, causing a lot of issues for truck drivers. And a lot of people right now are just trying to figure out how to kind of stay afloat or to still stay profitable during all of this. And this is one of the things we're going to dive into today, because business credit can help with a lot of these issues by providing a tremendous amount of capital to kind of navigate as we're going through this changing environment we're in right now. So business credit really helps you do a couple things. I mean, first of all, we're going to talk about ways today that you could tap into credit financing to be able to actually finance the trucks themselves. So whether you're just starting a trucking operation or expanding one, you can actually come in and get the money you need to be able to put trucks on the road or put more trucks on the road. But the other big thing is that it also helps you with the repair, the maintenance, the fuel of the vehicles. Look, anybody that drives a truck knows it could be $500, $600, $1,000 plus to fill a gas tank. So if you're just using consumer-based credit cards that report to consumer credit reporting agencies, or credit cards that don't report anywhere, that you're not getting business credit for, it's really problematic. And today we're going to talk about how you can actually tap into business credit to get credit with a personal guarantee and credit check, credit without a personal guarantee and credit check, and credit that you can use to be able to, get the fuel that you need, repair vehicles, maintain vehicles as well. And by the way, if you're just coming in, give me a shout out. Tell me where you're coming in from. Like the corporate builders coming in from Las Vegas saying hello. Always like giving everybody a shout out. So thanks for coming in and tell me where you're from. So Credit Suite can help with all of this, right? This is part of what our system does. So I'm here to provide free education, but don't forget that if you want the faster, easier path, this is exactly what we do here at Credit Suite. One of the biggest shifts in the market that really affects truckers right now is that WEX Fleet, which is one of the biggest underwriters of fuel fleet cards, just stopped offering no personal guarantee, no credit check credit cards. We were the first to break this news. We broke it weeks ago, and it's a really big change. It affects 37 of the major gas cards and fuel cards that are out there. So this is where you kind of helps to work with somebody who knows what's going on, because even though the vast majority of fuel cards that most people know about and have always used now require a guarantee and credit check, we still, for example, have access to a lot of sources that don't require guarantees or credit checks. So how do you build business credit if you're in the trucking industry? Well, the very first thing you got to do, as I always talk about, is you got to build a fundable foundation. So fundability becomes really essential. And the reason is because the vast majority of applications for credit and financing are denied, not because you don't qualify. They're denied because you just don't meet basic standards, basic requirements. So I remember when I was a little kid in grade school, right, where a teacher would try to prove the point and would give you a failing grade just because you left your name off the paper. I don't know if you ever experienced that. I did when I was in grade school. And that's exactly what this is for adult business owners. It's like leaving your name off of the work. The work was flawless, but yet you fail because you forgot the name. Right. So that's exactly what we're talking about with Fundable Foundation, is that, you might very well meet the requirements for credit cards, credit lines, and loans, but most business owners, the vast majority that do get denied because they leave their name off the assignment. They just don't meet the basic requirements that lenders and credit issuers have. So if you're going to do it right, this is absolutely without a doubt where you have to start. And Brian is in here from Triad of Success LLC in Colorado Springs. I'm a new partner. Thank you very much for joining the family. I'm really looking forward to working with you. Jarvis is saying hello. Brilliant Nolan. Hey, from Greensboro, North Carolina. Kenyatta is in the house. I always appreciate you coming in. Craig is coming in from Texas. We've got multiple people here. Kendria is from Las Vegas, and Kendria is even sharing this with other people. I really appreciate you doing that. Kenyatta is sharing as well. Brilliant, Nolan. I just started We Blessed Holland LLC. That's awesome, man. Well, you're in the right place in the right time, because that's exactly what we're going to talk about today, is how to actually get capital for that thing right now. So some things to keep in mind with fundability. It's all about separation of you and the business. So you've got to take the steps to be able to separate yourself from the business. You got to get an entity set up that's not a sole proprietorship, preferably like a corporation or LLC. The business name needs to be spelled the same way it's listed everywhere online. So if you've got details like and or incorporated, you need to make sure that's congruent. It's one of the things that gets a lot of people caught up when they're trying to get loans and credit lines. You need to have an EIN number. A lot of business owners still don't know that business credit's built for an EIN, not a DUNS number. So you have to actually have an EIN to ever build business credit. And you also should have a DUNS number. It's one of the first steps of getting set up with the reporting agencies. It's 10 to 15 minutes and 100% free. Even though DMB will try to charge you for it, you can still get your DUNS number for free, get your EIN for free, and get these crucial numbers to be able to set up your business foundation the right way. You should have a business bank account that your money's running into. About 6 months into business, a lot of funding opens up for you, even in trucking, but it's not going to work if you're not tracking the money that's coming into the business through a separate business account. I see so many business owners that can get tens or hundreds of thousands of dollars that fail to do so because they, for some crazy reason, are still running money through a personal bank account. You can't do it. It's super cheap and easy to open up a business bank account. You need to do it. You need to have a professional website, an email address that's congruent with the website domain. My website is creditsuite.com. My email is info@creditsuite.com. You got to stay away from Gmail, AOL type email addresses. This kind of stuff is just basic fundable foundation stuff, including having a phone number that's listed with 411, making sure the phone number is toll free, having a separate business address at a deliverable location, making sure it's not a PO box or a UPS address. So if you're an over-the-road trucker, you don't need to have one corporate office that everything's running out of. You can still get an address from Regis, DaVinci, or Alliance, an actual virtual office, which still gives you a lot of credibility. Lenders and credit issuers still consider that you're in a real commercial location, even if you're using those kind of addresses. So some things to consider there as well. As I mentioned, phone number, got to be listed with 411, can't be mobile phone, can't be home phone. These are some of the basic foundational elements that you've got to get right as a trucker, or you're just not going to be able to come in and get money for a trucking business. Now, don't get me wrong. What happens with foundational stuff is that sometimes you'll skip some of what I said and you'll still get approvals and you think you're in the clear. So you come in and not have a phone number listed with 411, get a starter vendor approved and say, hey, I don't know what Ty was talking about. I don't have my number with 411 and I got this guy without a problem. But then almost always what happens is then you start getting denied. So then you start getting one approval, then you get denied and you go, I don't know what happened. Meaning that the sporadic approvals give you false hope that you don't need to build the fundable foundation as I've outlined and you think you're in the clear. But when we look at sources like Amazon, for example, they'll issue you a credit card based on a home address, but Walmart won't. And that's my perfect example of how fundability works. I'm giving you an overview that if you met all this criteria, you're going to meet the basic criteria that every lender and credit issuer has. And when you don't have this, you don't have a DUNS number, you don't have an EIN, you're a sole proprietor, any of these things. And what happens is you start ruling out certain types of funding, ruling out certain type of credit issuers and lenders. So even though some will approve you, others won't approve you, and the ones that will approve you will usually approve you for less money and worse terms, shorter interest rates, shorter terms, and higher interest rates. So the bottom line is I'm teaching you a strategy that will get you the most money at the best terms. And if you don't follow this and you skip these steps, then this is where you start getting denied and don't realize it because you get these sporadic approvals. Then you get denials, and you don't think it's because of fundable foundation stuff because you got the approvals. But you got the approvals because I can show you our actual finance suite where our clients come in and be able to build business credit. You'll see that we have underwriting guidelines for every single source. And every single one of those sources, their underwriting requirements are different. Some require a guarantee, some don't. Some require a DUNS number, some don't. Some need you to have an actual retail or a physical commercial location, some don't. But when you have all this fundable foundation done the right way, that's where you'll appeal to the vast majority of credit issuers and lenders, not just some. And that's how you can always come in and be able to get the most amount of money at the best terms. Brian says, I know a lot of truckers. That was my old carrier of 24 years. And yes, a lot of owner operators have issues with credit. Look, this isn't uncommon. You know, a lot of business owners have issues with personal credit because the reality is we're risk takers and our credit reflects that we take risks. And usually it takes, very many years of running a business where you really start generating income and profits and having a lot of money to spend to fix your credit before that ever gets corrected. But you also should know this is why business credit exists. Business credit's not based on personal credit quality. When you build business credit the right way, no matter how good or bad your personal credit may be, you're still able to get the capital that you actually need. I'm at work. Will this live be saved? Yes, it is. You are tuning in here on Facebook. So if you go to creditsuite.com or you go to facebook.com/credit suite, you'll be able to access the playback of this. Hey, Forest City, Arkansas. Hey, thanks for coming in. Or is that here? Hey, Forest City coming in the house. I think I said Arkansas. It's actually Arizona. Hey, y'all. Houston, Texas is in the house. And Sharita from Houston, Texas is in the house. So many box truck businesses need this info. Yes. And I've done a lot of stuff in the industry, actually working with box trucks. So a lot can benefit. This is where we help a lot of business owners be able to get the money they need to get these trucks, and as well as be able to fuel those trucks as well. And Surratt Logistics is in the house as well. Thanks everybody for coming in and saying hello. So what happens after that? Well, after that, you got to find the right lenders to finance what you need. So first of all, we do something simultaneously. At Credit Suite, what we do is we help business owners build the fundable foundation, because that's the first step of getting any kind of money. Then we start getting you business lending, and this is credit lines and loans. At the same time, we're building business credit. So it's all in one big financing bucket. And we kind of look at, in this financing bucket, there's two sides. There's business lending, and these are loans and credit lines. And then we've got revolving credit. We've got like business credit, credit cards. And so we start deploying a strategy to do both at the same time. I recommend you do the same, whether you're working with us or you're not. So what I mean by that is that you should be looking at what kind of credit lines and loans are available for you as well. A lot of different financing products out there. You've got to figure out what works best for you. And this really comes down to a lot of factors, including the 3 C's, which I'll talk about in a minute. Now, one of the things to keep in mind is that trucking is a high risk in an industry. So per the SIC and the NAICS, which is kind of what the government uses to classify industries, trucking is seen as a high risk industry. So this means it's harder to get the credit and financing you need. And it's why you actually need to make sure that you come in and you build business credit, you improve your fundability. These kind of things will make it easier to get approved, even though you're in a high risk industry. Now, you may say, why is trucking high risk? I don't know. I don't know why any of these specific industries is high risk. We're in financial services, accountants, attorneys, mortgage brokers. We're all in financial services. We're all seen as high risk, and I don't exactly know why. But I will tell you that you and I being in a high risk industries means it is harder to get the money that we need. And so as a result of that, you really want to make sure that you come in and build that fundable foundation, and that you make sure that you build business credit, which helps give you a much greater chance of getting approved. And by the way, one of the reasons that maybe the trucking is high risk is because it's just got high risks of injury on the job. So there's a lot of different reasons that industries are high risk, safety issues, those kind of things, some things to think about. So where do you go to get money? Well, traditional banks and loans don't always work for high risk industries. Nearly 90% of applications at big banks are denied. And by the way, the statistic is that over 50% are denied for foundational reasons. So if you look at this, the vast majority, about 60% of all denied applications are denied because of stuff you can easily fix with fundability, not because you didn't qualify. But remember, being in a high-risk industry, as you and I are, it means you're going to face stricter underwriting guidelines. It means the big banks, the Chase, the Wells Fargo, the Bank of America, the SBA loans, they might not be the way to go. You may want to look at a fintech option. You may want to look at an alternative lender instead, because that's an easier way to be able to get approved. So let's talk a little bit more about some of these ways. But before we jump into the actual credit, I do want to talk about some options on the funding side. So on the funding side, we've got a great free guide at creditsuite.com/27 ways, 27 ways. So if you go to creditsuite.com/27, the word ways, with 27 ways to be able to get money for your business. And when we look at how you get money for your business, we look at these 3 different pillars: cash flow, credit, and collateral. So if you've got consistent cash flow going through a business bank account, then we can get you all kinds of money based on that. There's cash flow financing, merchant cash advances. If you accept, payments through PayPal, Square, Stripe, there's financing options there as well. Places like Bluevine, places like, they have AI-based credit, excuse me, I'm tripping over my words here. So if we look at places like Bluevine and Fundbox, they have credit lines that really aren't based on credit. They're based on consistent revenue. They use AI to plug into your bank account. So the underwriting is really fast with same day approvals and oftentimes get credit lines same day. We don't look at cash flows as our strength, but we look at the fact that we've got collateral. Well, then we can borrow against real estate, stocks, bonds, 401ks, IRAs, commercial vehicles, all kinds of things to get money. Or we could leverage the truck we're buying and be able to get financing specifically to buy trucks. So that's another kind of collateral-based financing because the truck is the collateral. Then we look at credit-based financing. And credit-based financing kind of comes into two pillars. And it's based on consumer credit or business credit. So we can get money by building business credit. If you've got good consumer credit, well, then that opens up programs as well where you can get hundreds of thousands of dollars in credit lines using your credit or somebody else's, family member, friend, potential investor that wants to be a guarantor. Any of those type of people could be assigners. So a couple different options on the credit side. So the easiest way to remember this, there's 3 ways to get money for a business. 3 C's. Cash flow begins with a C, right? Credit begins with a C. Collateral. Cash flow, credit, collateral. It's all you need to remember is that if you want to get money for a business, what is your strength? Do you have consistent cash flow? No. Then you're not going to get money based on those. Do you have collateral? No. Then you rule out those. Do you have credit? No. Well, then that's when you build business credit. So remember, it's always these 3 C's, and one of those C's will help determine the type of money that you're actually able to be able to get for the business. And we've got West Covina, California's in the house. Jameson Mayo from Huntsville. Thank you for coming in. Devon just says, I'm in the house. I love it, Devon. That's the coolest so far. Hello from Oklahoma. Chris, thanks for coming in and saying hello. New Jersey's in the house. Man, we got people from all over the country tuning in. Thanks, everybody, for coming in and saying hello. So credit lines, secured loans, SBA. If you do have a really well-established, these are some of the paths that you probably want to take. So let's dive into some of these specifically. Equipment financing. Equipment financing, there's specific segments just for trucking, just for buying trucking, or just for buying trucks. And you can get the money you need to actually buy trucks and put them on the road. Whether it be one truck or a fleet of trucks, you're able to actually use equipment financing to get approved. There's 3 kinds of equipment financing. There's equipment financing. And equipment financing is basically you can get it as a startup. Sometimes they want to have a year in business. Oftentimes they don't. With equipment leasing, you get better terms, but you got to be in business about a year and have better credit. Equipment financing you can get with credit of 500s. Equipment leasing, you usually need to be about 620, 630 to get approved for equipment leasing. And there's a third kind, which is called equipment sale leaseback. Let's say you own a truck free and clear. You could borrow against that truck and get a credit line. And basically what you're doing is you're leasing it back and then you're selling it back. Man, I'm tripping over my words today. So let me start over. With equipment sale leaseback, what happens is you have a piece of equipment worth money. Let's say it's a truck. You're selling it to the lender and then leasing it back from them. Then when you're done with your payments, you take back ownership. So you're basically using it, something you own free and clear as collateral, borrowing against it to get the money you need. Then once you've paid back your payments, then that collateral is free of any liens and back to be yours again. So equipment sale leaseback is a great way to get money if you have money that you have free and clear. Okay. And there's all kinds of tax write-offs that you're able to get from this as well. So 3 kinds of equipment financing here. Equipment financing we can get as a startup with credit issues. Equipment leasing, you're in business, better credit gets us better terms, but similar to equipment financing outside of that. And this third kind of completely out of the ordinary type of equipment financing where it allows us to borrow against equipment that we may already own. Instead of actually being able to get the money for equipment, we borrow against equipment that we already own. Okay, so also keep in mind, there's a lot of stuff that we can help you with along the way of finding the best type of options. But let's also go down the road of building business credit as well. So when we talk about business credit, we also want to talk about the steps that you need to take to build business credit. So remember, we talked about a lot of kind of financing we can get based on cash flow financing, merchant cash advances, a Fundbox, Bluevine credit lines. We've also talked about credit-based financing. We use good credit to get a program like Credit Line Hybrid, where we can actually get credit lines that we need to be able to buy trucks or fund the business. And we can get these credit lines no doc, We can get them 0%. So our payments stay really low. We can use the credit of ourself or a guarantor to be able to get the money that we need. Then we have this third pillar of collateral-based financing. We can use stocks, bonds, 401ks, IRAs. Our customers pay us on terms. That could be an asset. We have purchase orders. We have equipment. We have that we own free and clear. We have commercial vehicles, residential, commercial real estate. Any of these things can be served up as collateral and qualify for what's called asset-based lending, using that collateral or that asset as collateral to be able to get funding. 1%, 2%, 3% interest rates you're able to get with that kind of funding. So really good way to go as well. And then we talk about that third pillar of credit, and not only just consumer credit, but business credit. And when it comes to building business credit, we talked about the first step of fundability. The next steps after that just come down to getting credit you're going to use to grow the business. So we want to come in after we've built our fundability. We want to start building business credit with what are called starter vendors. And starter vendors are places like Uline. They're places like Granger that will give you credit when you have none. They report it to the reporting agencies. Now, you can also get some credit like Phillips 76, et cetera, a lot of gas cards, but they will require a personal guarantee. They will require a credit check if you're using them to start building your business credit. But as an over-the-road trucker, there's a ton of fuel cards available that you're able to tap into and get even with a guarantee to use to jumpstart your business credit building. So you've got some options there as well. Once you have about 5 accounts of your business credit reports, that's when you can kind of move on to retail credit. Here, I'll pull this up to show you what this looks like as well. And retail credit is basically credit with every major retailer. So if you think about places like Nordstrom or Macy's or Sam's Club, or Costco, Staples, Office Depot. We think about O'Reilly Auto Parts and places like that where we get auto parts or different kind of vehicle parts that we may need. All these kind of things are different accounts that you're able to get to be able to build your business credit. And you can see that this is exactly how we do this for our clients. After we build that fundable foundation, then we help get the DUNS number, get set up with the reporting agencies. Then we get those Uline, Granger type of accounts. Now, our clients are getting a 90% discount on credit monitoring. So instead of spending thousands a year, they're only spending about $24 a month. But once you start building business credit, you need to get access to your business credit reports because you need to see these initial starter vendors start reporting on those business credit reports. And then from there, you just kind of move through the tiers of credit. Now, these tiers change all the time. Every day I get multiple different emails about sources that move from tier 1 to tier 2 or tier 2 to tier 4, et cetera. But as you can see, there's just no shortage of credit and financing that's available to grow a business. A lot of this is available without a personal guarantee and credit check. A lot of these type of fleet accounts that you can get. And you can see that this one with Gulf actually reports to DNB, Equifax, Experian. And of course, if you're not working with us, there's some things you want to keep in mind. You need to get an idea of exactly what their underwriting requirements are. The reason our clients go so fast through the business credit building system is just that they know which tier of credit to apply for in what order. And they also can see the underwriting guidelines for every source. So you're only ever applying for what you know you're going to get approved for. But if we look at this, we have an entity. We talked about that today, an EIN, a business address, a DUNS number, right? A bank account, a phone number. These are all for fundability requirements that we talked about today. But you can also see that this one requires that you have a DNB Paydex score of 80 or higher. You need to have business credit established here. This is exactly why it's in a later tier. It's in tier 2. It's not in tier 1. But a lot of different credit and financing that you're able to get without personal guarantees, without personal credit checks. And you're able to continue to move through the tiers of business credit building and get more and more credit. So when you usually have about 5 accounts in your business credit reports, you can start to get retail credit. About 8 accounts, you're able to tap into a lot of type of fleet cards, a lot of which without a guarantee. Now, again, the key is that with this big change with Lex Fleet, a lot of these sources now are going to require a guarantee and credit check. So you've got to be very close because there's not a lot of them out there, and you got to be very select if you want to get cards without the personal guarantee, without the personal credit check. But as an over-the-road trucker, you can see here from Arco Fleet to Speedway, Sunoco, BP, Sinclair, Shell, you can see just how many sources there are out there that offer business credit for your business, Citgo, that you're able to actually use as your business grows. So that way you're not constantly looking for a specific kind of fuel station. You can actually get credit at all the major fuel stations out there, then move up to getting auto financing without a guarantee and credit check, Visa cards, MasterCards, or what we call bank credit without a guarantee and credit check. All this kind of credit and financing becomes available for you where you're not actually having to be able to use personal credit to be able to get approved. You're able to build business credit, and basically your business, and it can fund itself at that point where you don't need a lot of what else is needed to be able to get financing as well. And we've got Austin, Texas in the house. Sand and Gravel Trucking is in the house. Tony Smith says, I have everything in place for my trucking business except trucking and working capital. Well, again, a lot of the options. And my best advice for you, Tony, is to figure out what your strength is. Do you have cash flow? You're starting it. Probably not. Do you have stocks, bonds, 401ks, vehicles, something that could serve as collateral? If not, then we're relying on consumer credit of you or somebody else, or we want to build business credit to fund the business. But that 3C of cash flow, credit, or collateral makes it super simple, Tony, to know what you can get. You got to know what your strength is and then get money in one of those pillars. And remember, if you don't have strength in any of those, that's especially when you want to build business credit because it can still help you get approved. RJ says, I was just approved for truck financing, but they're requiring 2016 or newer truck and 30% down. Going to have to beg, cheat, and steal to get the money. Again, see, that's another thing, RJ. We call this funding stacking. So this actually happens a lot. So we help business owners buy businesses, for example, and they need 10 or 20% down. And we just get the financing from another source. So a lot of our clients that get equipment financing, we actually get them another kind of funding to get the down payment they need for the equipment financing. So in a lot of cases, they don't have to come out of money. They'll come out of pocket with money. So this is just funding stacking, and it's something you really want to consider is coming in and actually being able to stack funding. Now you got approved for equipment financing to buy the truck, which, by the way, give us a call. We may be able to even do way better than the 30% down, but now you can get some other kind of funding to cover the 30% down and still be able to come in and more than likely successfully be able to get what you need potentially with no money down. As Bismarck says, the hybrid program didn't work for me, though. I have 810 personal credit score. It's not just about personal credit. Credit line hybrid is all about the depth of credit you have. So if you have a good credit score, that's one thing. The question is, it's all based on how much revolving credit you have. So there are programs out there like Credit Line Hybrid, for example, that work very good if you have good personal credit, but do you have 2, 3, 4 revolving credit card accounts that have been on your credit report for 2 or 3 years? Do you have low inquiries on your credit report? Is your utilization low? These are all factors that tie in to being able to get somebody approved. So some things to keep in mind there as well. Frito-Lay Truck Leasing, 1 year lease, $24,000 and repairs $20,000 to lease the vehicle and get the route for 12 months. And they pay you back with a cash flow of $2,000 a month. And again, you know, it's pay to play, right? So many of us are in the world where we've got to pay money to be able, we've got to actually spend money to be able to make money. And this kind of financing that we talked about today is some of the ways you could tap in to get the money you need to be able to actually buy in and then get the money back as you're actually earning it. So it's some things to keep in mind. So remember, rising gas prices, inflation. A lot of people in the trucking industry are struggling. So if we can help you along the way, just give us a call. You can get a free finance assessment. We never charge you any money to be able to get financing. We do have a business credit building program that helps save you a ton of money from being able to try to go build business credit on your own. If you got value from this training, make sure you go to creditsuite.com/toolbox. We got about $400 worth of goodies there for you. And all you have to do is just share our next stream. You're able to get the $400 worth of goodies for super simple. And give us a call for a free finance assessment. We can talk to you about what's wrong with your fundability that you need to improve to help make it easier for you to get the credit financing you need. We can also come in and be able to help you do a finance assessment to see all the funding you can qualify for right now. And we'll even get your business credit reports for you for free, give you tips and tactics to build your business credit. And again, if you got value from the training, make sure you like and subscribe and go to creditsuite.com. In the top right of our page, you'll see that we've got the ability to be able to like all of our social channels in less than a minute. And then you'll get daily tips on places like Twitter and Facebook. You'll be able to get thousands of videos on YouTube. You'll be able to access 1-minute training on places like Insta and TikTok, all of which is dedicated to helping you get the money you need to start and grow your business. So make sure you like and subscribe and give us a call for your free finance assessment as well. Hey, I wanted to thank you very much for tuning in. If you do happen to be in the Miami area, I'll be at the Fort Lauderdale Convention Center at the Done is Better Than Perfect event, speaking Saturday and Sunday. So I hope to get a chance to see you there. You go to Facebook, type in Done is Better Than Perfect. You'll find the group. All the details you need are there. And I look forward to maybe get a chance to run into some of you down in Fort Lauderdale over the weekend. So thanks for tuning in. Hope you have a great day. Look forward to seeing you on our next training. We're talking about more cool ways to get the money you need.